Hello, welcome again to Fairtax Power Radio. I'm Bob Paxton.
I'm Bob Scarborough.
And I'm Jim Bennett.
And we are the
Uh,
Fairtax
FAIRtax
Guys,
Guys.
as always. Let's see. Jim has a scrolling banner too. He just couldn't get his hands on it right before we started recording, so we'll give you a pass on that, bud.
Okay.
All righty. Well, Jim, first let me thank you for taking time out from your day to come talk to us. For those of you who may not be familiar, Jim holds the title of Grassroots Director at the Americans for Fair Taxation organization, writes the weekly Grassroots column, which I hope you are reading. And again, thanks for being with us.
Well, thank you guys for having me. Always a
All,
pleasure to be on your show.
all
Thank you.
right. Well, let me tell you, most of the time, Scarborough and I try to be pretty diligent about, creating our own content or finding our own things to talk about here on the program. But occasionally, Steve will write something in a chairman's report, or you'll write something in the Grassroots Corner that is just too good for us not to jump on. And this is the case with the Grassroots Corner that's actually going to be coming out in a couple of weeks. But when I saw the advance copy, I said, "Oh, mercy! This is something that we've got to jump on with Jim on the program here." So here you are. You know which one I'm talking about. Go ahead and set this up for us, if you will.
Well, thank you, Bob. And sure. And one thing I should have mentioned was that Bob edits my FAIRtax Grassroots Corners. And so he takes a sow's ear and makes it into a silk purse. And I'm very thankful to him for doing that. Now,
No problem.
uh, just to set this up, in the 1970s, I lived overseas. I started out with the U.S. Army, and I was one of the maybe 0.1% of military personnel that got out of the Army and stayed in Germany. And that was a sea change for me because when I left the Army, where I was protected by a status of forces treaty and lived in Germany, I was suddenly subject to two income tax codes, the German tax code and the U.S. Internal Revenue Code. And the reason that's unusual is because American citizens belong to one of two countries that tax their citizens who live outside the country and maintain no residence in the United States. A German citizen, for example, who lives in New York and who maintains no residence in Germany is only subject to income that's specifically derived from Germany. But whatever the income is that he earns in New York and in the United States is none of the German tax authorities' business. And that's the way it should be with our country. And that's the way it would be if we had the fair tax, which I never get tired of saying. But unfortunately, that's not the case. The United States is one of I think the other country that I'm aware of is Eritrea, a tiny little country in Africa that taxes its expats who live outside the country and maintain no residence. So not many people are aware of this because not that many, well, I think there are probably there's a couple of million Americans who live outside the country, but they don't make not many people pay attention because it's a fairly small number compared to the U.S. population. But the effects of being subject to taxation by the United States when one lives abroad are huge for that small population. And nobody was paying a lot of attention to it until Pope Leo, an American Peruvian citizen, became the head of the largest Christian denomination in the world, and I think there are about 1.4 billion Catholics, or don't hold me to the number, but it's a big number. And suddenly, the issue came up in my mind because I looked at a cartoon about a Trojan horse carrying the names FATCA and FBAR going through the Vatican city of Troy. And I said, I've got to write something about this. And so I did, and I sent it to my editor, Bob, and he picked up on it. And that's one of the reasons I'm here. So it's going to be an interesting question because as an American citizen, the Pope theoretically is subject to the U.S. tax code and has to file a Form 1040 even though he resides in the Vatican and he's arguably the head of state. Now, maybe the head of state doctrine might exempt him from being subject to the U.S. income tax, but I don't know. There's a lot of questions that this brings up. So there are a few softening provisions of the U.S. tax code. One is that, well, first of all, the standard deduction for a single person, such as the Pope, because Catholic members of the Catholic clergy are single, they got a standard deduction of about $14,000 a year. Well, that's
I
not
think he
gonna
makes a
help
little
much.
more than that.
Yeah, he does make a little more. I didn't know until I finished writing the article that an article came out in Fortune magazine that I tacked onto the article that I drafted, that the Pope makes 30,000 euros a month, which is about 33,000 US dollars, or basically it's well over a six-figure income. And so the $14,000 isn't going to help him much. And the other provision that helps American citizens is that you can get earned income. And I love that term, because earned income means that if you get income through your savings and investment, which also requires a certain degree of self-discipline and sacrifice, that's not earned income. Just income that you work by, I don't know, getting behind a plow, working in a factory, or working in an office. That's earned income. So you can exempt up to $130,000 a year if you are an American citizen living abroad. Now, the Pope, I think by my math, earns close to $400,000 a year, so that's not going to help him all that much. So, but what's now, if the Pope is subject to taxation by the Vatican, and I have no idea what Vatican tax law is, he's going to have he can take a credit on his U.S. income tax return for taxes paid to the Vatican, and that's going to help him. That would help him if the Vatican rate is higher than the U.S. rate, because then he won't owe any additional tax to the United States. But what's really unfair about the system is you do still get the worst of both tax worlds, because if, for example, you're a citizen abroad and you own tax-free municipal bonds in the United States, the host country isn't going to recognize that exemption. And there are some exemptions that the host country does recognize that the IRS does not. So you can't really plan for taxes. And it's also administrative burden that you have. Now, if you have the, go ahead.
I think your video froze there for just a second.
Oh, I'm sorry.
Not your fault.
Am I good now? Yeah,
I think so.
Okay, so basically, U.S. citizens abroad, they get the worst of both tax worlds. And it's a huge administrative burden. Now, when I left Germany and came back to the United States, well, there was one positive development after I came back. U.S. citizens abroad can now vote for federal offices. You can vote for your president. You can vote for your senators and congressmen in the last U.S. jurisdiction to which you have a connection. But I wasn't able to do that. So basically, I was disenfranchised when I lived in Germany, but I still had to file a U.S. income tax return. That's been changed somewhat, but there's been a negative development. There's something called FATCA, and FATCA stands for the Foreign Account Tax Compliance Act, and it not only burdens U.S. citizens to report accounts in the abroad, it means that many foreign banks are subject to U.S. reporting if their U.S. citizens comply with FATCA. And many foreign banks will not open a bank account if they find out that the person who wants to open the bank account is a U.S. citizen. Now, I think in the case of
are you telling me the Pope is going to have a hard time getting a bank account?
Well, in my original draft, if he wants to have his account at the Bank of the Holy Spirit, the Banco di Santo Spirito, I think I like to say that this is the one time that the Pope himself gets a dispensation from the bank.
Good.
Because I don't think the bank is going to refuse to open an account for His Holiness if the bank, given that it's His Holiness, I think they will voluntarily comply with a bevy of IRS requirements because it's, hey, you know, after all, it's the Pope. So, but many, if the Pope were just Joe Blow living in Paris, and the Banque Nationale de Paris found out he was just Joe Blow, U.S. citizen, they may give him a hard time about opening an account at the BNP. So that's one of the problems, and because the banks just don't want to do that. And then there's a foreign bank account report. A report of foreign bank and financial accounts is called FBAR. And there was a gentleman named Bittner who was a Romanian citizen who ran into that problem because he came over to the United States to escape the communist Romania. And I think he made the mistake of becoming a United States citizen. And then he decided after the Iron Curtain fell, he went back to Romania and he made it big. And he didn't know about his requirement to file this FBAR report. So when he got back to Texas, he found out, oops, I forgot to do this. And this was several years and a bunch of bank accounts. So he decided to hire an accountant and comply. And the IRS agreed that he didn't willfully fail to file the FBAR report because that would have landed him in criminal trouble. He merely mistakenly didn't know about the requirement, so he didn't file, and so the penalty is $10,000. It's $10,000, and the issue that came before the Supreme Court is it $10,000 per account per year, or is it just $10,000 per report? And the Supreme Court sided finally with Mr. Bittner after I don't know how many legal fees. So because the Supreme Court agreed with Mr. Bittner, his tax bill went from $2.7 million to a mere $50,000 for 5 years that he forgot to file the reports. So that's the FBAR. Now, so what can the Pope do? He can either continue to hold his U.S. citizenship and continue to file the Form 1040. He may try to argue active state. I'm a head of state. There should be a sovereign immunity argument. I don't know if that one's ever been tested because I don't know that a head of state. Well, Boris Johnson became the Prime Minister of England, and he went to the U.S. Embassy and renounced his U.S. citizenship. He was born in New York, so that's why he had to do that. But I don't know. The other thing the Pope could do is renounce his citizenship, and I think that now costs $3,000. Let's see, what did I say in my whatever it is?
I think it's about $2,300.
Yeah, that's what it is. Yeah, $2,300. It was supposed to go down, but that hasn't been implemented yet. So for a mere $2,300, you can renounce your citizenship. Now, it used to be that Inspector Javert could pursue you for 6 years after you renounced your citizenship because the presumption was that you were renouncing your citizenship to avoid U.S. taxes. And that's what happened with Liz Taylor way back in the day. And I think that's gone away. So I don't think the IRS goes after you for another 6 years after you've renounced your citizenship. They just leave you alone. And so then you're a citizen of whatever country you live in. But that's pretty much it. So President Trump on a I think it was I think he was talking to the head of the Republican National Committee, called for the end of double taxation of Americans living abroad. I don't think that's in the big, beautiful bill. But my argument as to why it matters is that U.S. citizens abroad can do one of two things. They could encourage U.S. exports to another country, or they could encourage foreign investment in the United States, which is basically what I did when I was with the German insurance company in Cologne, and it eventually opened a U.S. branch, and it had to invest a lot of money in the United States. So here I was, a U.S. citizen, helping with that process. But as long as I was sitting in Germany, I was being penalized for my citizenship, and there was certainly no reciprocity in it. So that's why I think that that's why I think that it would be far better off if the Internal Revenue Service and the Internal Revenue Code could leave American expats alone. I don't know how much money they collect from people who go overseas, but that brings us to our favorite topic, the fair tax. Yes. Because if we had the fair tax, there would be no taxation of Americans who live outside the United States, who earn money outside the United States, because there's no more income tax. And as long as they consume outside the United States, that wouldn't be the subject matter of the fair tax. It would only be the subject matter of the fair tax when U.S. citizens come home on a visit and spend money in the United States. Then they spend money they pay tax on their consumption, and that's it. When they return, there's no more tax, and that's the way it ought to be. So, I think that's. I think I've sort of rambled and covered a rather large range of topics, but I hope I painted a picture of what it's like for a U.S. citizen who lives outside the United States and how unfairly they're treated.
Well, and I think also you underscore the utter complexities of tax compliance, whether you're living overseas or here in the United States, and the number of pages of information that you have to keep up with. It has to be pretty substantial in terms of whatever activities you make regarding your income in another country.
Well, it certainly is, because you have to keep basically two sets of tax books. You've got to keep the tax books. In my case, it was Germany and the Internal Revenue Service. My situation was fairly simple because I was the German equivalent of a W-2 employee, and so I had to file the German tax return, and I had to file the American tax return. But it was I still had to be aware of what the rules were for both countries.
Right, and I was going to look up and ask the question about how much revenue does the Treasury get from expats? Just a general number. Do we know that number?
I don't have that off the top of my head. I think it's a fairly small number, and it could be very easily made up with the fair tax.
Correct, and that was going to be my next comment, and it wonder who or why they feel like it's important to just chase everybody down wherever you may live if you're a U.S. citizen. I mean, is it possible that people would renounce their citizenship and pay the $2,300 and some change to file that paperwork if they're making a ton of money? I can imagine that somebody in the construction business in a war-torn area would be fine with renouncing their citizenship because they're just making thousands and thousands of dollars, tens of thousands, if not more.
Sure. I think another there's an attorney, you've had him on your show, John Richardson in Toronto, and that guy really knows his onions when it comes to rules that affect American expats, tax rules. He's a dual U.S. Canadian citizen, and he's admitted to the bars of New York, Massachusetts, and Ontario. And he has clients all over the world. And one of his favorite anecdotes is you have a lot of people who are what we call accidental Americans. Let's say you have someone born in France whose father is an American citizen and mother is a French citizen, and this person has never been to the United States, never had anything to do with the United States. Suddenly he becomes 18, becomes 21, and finds out, oops, I have a U.S. tax obligation, and they can't do anything to me while I'm in France. But let's say I want to come visit the United States or visit my father's relatives. Then I'd have to be concerned about landing in Kennedy Airport. They probably won't check his tax status when he goes through customs, but the point is that they could. And so you have these purely accidental Americans who find themselves subject to this tax liability, and they haven't filed taxes for years. And the person to go to in that case would be John Richardson, because John knows how to negotiate with the IRS to handle those situations. And I'm not sure I would recommend staying out, sticking my head in the sand and not dealing with the topic. But I think the better path is to go to John and have him negotiate for you and have you get right with the IRS until we get the fair tax.
Yes,
indeed.
That's the big thing. Jim Bennett is with us today. He takes care of the Grassroots corner and other important folks within the Americans for Fair Taxation. And the title of the article upcoming in an upcoming Grassroots corner is, Does Pope Leo the 14th have a problem with the IRS? And I guess he could wave a magic wand or something, and everybody's going to go, no problem, sir.
Oh, I can just imagine the firestorm that would erupt on social media if the IRS tried to send the Pope a tax bill. That might be a problem. But we got about 5.5 minutes left, Jim. One other thing I wanted to, actually, a couple other things I wanted to touch on real quick. You've got this compensation in kind thing. You don't have to be paid in cash to, get yourself a tax obligation. Touch on that just really quickly. Then I got one more thing I want to ask you about.
Sure. Well, there's a body of tax law that says that let's say your employer provides you with an apartment and provides you with a company car, and that's called compensation in kind because they're not paying you cash; they're paying you with something else. And the issue with the IRS becomes: is the employer giving you your apartment for the convenience of the employer? Or is it just an extra perk that you're getting because the employer wants to keep you as an employee because the employer thinks you're valuable? So I don't know. Do you think the Vatican apartment in Rome is pretty nice? And do you think that's for the convenience of Pope Leo's ultimate employer?
I would hope so. But okay. The other thing I wanted to touch on real quick is not something that we talked about in the Grassroots Corner, but it's something you usually tack on to the bottom of most of your articles. And that is, if you are having a fair tax related public event, if you've got a booth at a fair or something like that, people can talk to you ahead of time and get insurance for that. So explain how that works really quick.
Oh, Bob, I'm really glad you brought that up. Yes, our insurance does require, we do have liability insurance. So if you want to have a booth or you want to have a table at a fair, then please let us know, because then we can let our insurance agent know and we can get insurance for you. Our insurance policy does require that we let them know ahead of time. So please let us know ahead of time if you're going to do something like that.
And that will be provided by Americans for Fair Taxation at no cost to the person who's holding the event. Is that correct?
That's correct. So please let us know.
That's great news. That's great information. And you have to have that liability insurance, and you want it. So in case somebody passes out at the exciting benefits of the FAIRtax right there at your booth, you would want to make sure that, you were covered in case they, knock their head on publication 17 on the way down.
Well, unfortunately, we live in a world of professional litigators who will always be finding a way to sue you for something. So it's definitely to your advantage to have this coverage if you're having a public event on behalf of the FAIRtax. Just Jim, tell people real quickly how they can get a hold of you to order that protection.
Sure. My email is simple. It's jim.bennett, Bennett, at fairtax.org. That's easy. Or you can call me or text me at 908-578-4975. But probably the easier one to remember is the Jim Bennett at fairtax.org.
All righty. All right. Scarborough, you got anything you want to wrap up with here real quick?
Thank you, Jim. And please go and get your 2025 Palm cards and prebate cards. They're in stock. They cost absolutely nothing to purchase or to ship, and they are available at fairtaxstore.org. They're Palm cards that tell all about the FAIRtax. The prebate cards are like a business size card, and they have current information on there that you can show people in different size families. This is how much you will get in the amount of prebate ahead of the month that you would be getting the check for.
All right. Well, Jim, I'll tell you, fascinating Grassroots corner about the possibility of the Pope incurring an income tax liability to the IRS. This is going to be fun to watch. Only you would come up with something like that.
How about the College of Cardinals are going to rue the day? And thank you for having me.
Oh, mercy. I tell you, our pleasure. I tell you what, this is just, we illustrate the absurdity of the income tax code every week here on FAIRtax Power Radio. Didn't have time to do a Congress.gov segment on this show. We'll pick that up again next week. But it is just, mind-blowing to think that the IRS may be sending the Pope a tax bill. So we'll just have to see how that goes. Jim, again, thanks for being with us. We got to wrap this edition of FAIRtax Power Radio up. We are slap out of time again. So as we always do, we invite you to join us again, same time, same channel next week here for FAIRtax Power Radio. Until we meet again, I'm Bob Paxton.
Bob Scarborough.
I'm Jim Bennett.
We are the FAIRtax Guys Plus One for this week, reminding you, as we always do, that the FAIRtax is the only truly fair tax. And once you understand it, together, guys,
you'll demand it.
So what would you do for her?
Well, we've got several programs that will help her. We just need to find out how much she makes. But the good news is, the less she does, the more we can help.
Yeah.
If I may, with the FAIRtax, we wouldn't even tax her income. So the more she makes, the more she has.
But still, a consumption tax could eat up a lot of her income.
Which is why at the beginning of every month, we're actually going to give back all that she pays in taxes on basic necessities.
You're going to give her back her taxes?
Every month, on everything taxed on basic necessities. But we're also going to give it back to you and to every American citizen.
Why?
Well, we believe taxes should be fair.